Hello there everybody, a very good morning to you and a warm welcome back to howtotrade.com, and a warm welcome back to one of our live streams here across our social media channels, on our YouTube, on our Facebook, LinkedIn, and Twitter as well, or X as it's called, and of course in our trading room as well. A very good morning to you all, or good afternoon, good evening, wherever you're watching from over the world. So let's dive into today's stream, where we're going to be doing a little bit more of a workshop stream. So it's going to be a little bit of more of an educational lesson on, as you can see from the title, using smart money concepts with Fibonacci. So just a little bit of background I'll give you as well about why I'm doing this stream. It's just from a personal discovery in my own trading, really. So that's why I wanted to maybe do a stream on it. What I seem to be doing and what I've adopted into my strategy seems to have worked, or is working quite well. That's why I thought I'd do a stream on it, just to show you how that all works. So we're going to do that today, and obviously with it being, a fairly quiet news week, there's a few things going on, and we did do a week ahead stream yesterday, but there isn't a great deal, to be honest with you. Not as much as last week anyway. But anyway, it doesn't matter. Good morning to you all in the trading room. Martin174, hello to you. Good morning to you, Clone, as well. Very good to see you, and I hope you are doing well. Machine X, hello to you. Good morning. I hope you are doing well. And thank you very much for the message. Jerry, of course, always good to see Jerry, and of course down on our stream as well. And all, Machine X, all of you, Martin174, Clone, all of you on our stream. Very excited about today's live stream. Dan he wants to see how I'm utilising the Fibonacci in conjunction with smart money concepts. So that should be good. And so has Jerry. He's been waiting for this stream as well. So it's good to see. Hello to you all on the trading on the YouTube channel. Sorry. Freckle, good day to you. SMC and Fib, that's how I'm trying to trade so far, but not getting any luck. Okay, interesting. That how are you trying to use that? What is it you're struggling with when it comes to that? Are you just finding yourself on losing trades, or what time frame you trade in? So let me know how you're actually using those two concepts. Hopefully this stream will help you out as well. And good morning to you, Anna. It's very good to see you, and thank you very much for the message this morning. So overnight we had the RBA interest rate decision, and they decided to hold rates at 4.35%. I'm not sure if there was too much of an impact. Was there much of an impact on the Australian? I'm not a trader of the Australian dollar, if I'm being honest with you. I knew they held their rates. Nothing crazy's happened really in the pair. A little bit of weakness in the Australian dollar against the pound anyway. But yeah, nothing to write home about too much. They decided to keep rates at that 4.35%. I think everyone expected that one. That wasn't any real surprise, to be honest. On top of that, for today, where is it? That wasn't what I wanted to show you. In terms of high impact news, we've got some speech from the Bank of Japan Governor Ueda later. So, we've had some speech from the Bank of Japan Ueda, and we've also had a conference from the RBA, and then we've got Macklem speaking. So, yeah, it's just not going to do much. I don't think it's going to do much, guys, to be honest, today. And that's why I thought today would be a good idea to have more of an educational stream and more of a workshop. Sidicure, hello to you. Good to see you. Thank you very much for the message on the YouTube channel. And if anyone has anything they want me to cover in today's stream, then feel free to let me know as well. Okay. Just before we move on, if at any point you want to sort of adopt some of these concepts or anything on any trading accounts, we have got an offer over at Switch Markets at the moment, where if you deposit up to $5,000, then you'll be credited with that same amount. So it's a double up deposit boost promo thing that they're doing. So feel free to either message me for more details on that, or check out switchmarkets.com for more information. There's a team over there that will be happy to assist you on that. And good morning to you, Hal Matt. It's really good to see you. Thank you very much for the message today, and I hope you're doing well. So, right, let's just get straight into it then. I'm not saying anything that's going to take too long, but I'm going to show you the basics of how it all works, and then we're going to try and implement that onto the charts itself. And then it's really down to you to go off and sort of practice that, and you can rewatch this stream over and over again if you're in the trading room. If you're in the trading room, you will notice there's a past stream section, which I'll show you as well. Down euro pound, good time to buy the pullback as it's rallied quite a bit. Bottomed out or more downside. Yeah, we'll have a look at euro pound. We'll see if we can actually adopt some of the things that we're talking about here. Okay, right. Machine access. You saw prop trading beta when accessing how to trade on your phone. Yeah, it was something that we trialed a few months ago. Proprietary trading. It's not active at the moment. As I say, those decisions are over my head. I'm just one of the coaches here. It's something that we have discussions, like ongoing discussions on prop firms. If anyone would like to see us launch some sort of proprietary trading, give me a thumbs up or something, just to see if there's any interest in it, really. But yeah, there's something that we've discussed, but it's something that we don't really, we're not involved in too much at the moment. Okay, right. So, when it comes to the concepts that I'm going to talk about today, obviously I can't sit here and explain every single smart money concept because I'll be here all day. But essentially, if you head over to the HowToTrade website and on our education section, on course number 6, if you scroll down on course number 6, if you click move me to a new path, it will take you to the module that you want. And if you go down onto, funnily enough, that's a section on proprietary trading. If you look at module number 3 in this course, the course is called Growing a Successful Trader, and the module number 3 is called Trading Smart Money Concepts, and it's a module which is done completely by me, because Shane isn't much of a smart money trader. He is a very, very good Fibonacci trader, but he's not much of a smart money trader, so I put together all these videos. So you get the overview on smart money concepts, market structure explained, how to define supply and demand, that's similar to order blocks, liquidity, imbalance, FVGs, and a sort of methodology on how you can trade a smart money concept method. I would recommend that if you don't know about smart money concepts before watching this stream, I'd recommend that you head over to there, because obviously you probably won't understand what it is I'm on about in today's stream, okay? That's the most important thing. Right, onto the charts, and I'm using TradingView for my analysis. What I want you guys to do is have two things set up. If you're going to use Fibonacci plus smart money concepts, and let me just give you a bit of background on that first before we start. The reason that I'm doing this is because I assessed my own trading with my trade, because I have a trading journal, and I assessed it. There's a few things that I was getting wrong, and I thought, is there any, always can I improve? And there was one thing that I was probably not as good at, or I wasn't as confident in what I do, and that was finding my areas of interest, should we say. I'd played around with trying to use higher time frame order blocks and then refining them down, but I found that I'd either keep getting swerved because the order blocks seemed to be right at the beginning of the move, and I kept getting swerved away, even though I was getting the direction right. I was failing to actually get into the trade itself, or it was just that it wasn't reliable enough for me, and I was finding myself making some mistakes, and I was getting a little bit confused in what I was doing. So I actually spoke with Shane about this, and I said about potentially utilizing Fibonacci areas to find my areas of interest, because Shane's a really, really good Fibonacci trader. So I started to practice with it, and I started to have a look, and I thought, hang on, this actually works a little bit. A bit of research online, and essentially now the beginning part of my trading process, which was actually, funnily enough, the bit that was probably the weakest, I think I've now improved, and I wanted to bring that onto the stream, because it's not in the academy or anything, but it's just the way that I've improved the way that I trade, and I wanted to show you guys what that is. So basically what it is, really simply, is, because trading doesn't have to be complicated, is first of all, we need to have the correct Fibonacci tool set up. So as you can see, if you go over to TradingView and you try and draw out a Fibonacci, it probably doesn't look like this, right? It probably looks, like that when you try and draw it. Now I've got my own template set, which you can do like so. Oh, I've just changed it by accident. Didn't mean to do that. So anyway, I'll change it again. All right, that's the one I want. So let me save that. Save as. Right. So when you draw out your Fibonacci, well, if you want to have this same Fibonacci as me, the way you need to do it is if you right click and then go down to settings, you need to change the the options here that we've got. So we need to have the 0 level, the 38 or the 0.382, the 38.2, the 61.8, the 1 and the 0.5. They're the only 5 levels that I have set up on this Fibonacci. I know there's plenty more. I don't want to use Fibonacci any more than this. And this is just the way that I'm doing it. So what I'd recommend that you do, guys, is if you follow me and you set up this Fibonacci like so, and in this bottom left-hand corner, you can save it as a template. Yeah, you can change the colors to whatever you want. Okay? And if anyone has any questions, just stop me at any point. I'm just checking there's no questions on there. For Mothiats, good morning to you. Good to see you. Shane is a scalper indeed. So once you've got your Fibonacci set up, that's great. That's all we need. So put that to one side. Get rid of it. The other thing that we need is the Smart Money Concepts indicator, which we're not going to use as gospel, but we're going to use it to assist us because it will help. And this one that I like to use is called Smart Money Concepts, in brackets, Lux Algo, historical coloured, all type, whatever that is. So if you go onto indicators at the top and you type in Smart Money Concepts, it's this one at the top here. It's got the most downloads. It's this one at the top. It basically gives you everything in one indicator. So if you turn that on, it gives you these blue areas which are bullish order blocks and these red areas which are bearish order blocks, and it tells you like changes of character, gives you fair value gaps as well. But yeah, I tend to have that off as much as possible and I only turn it on at the last minute. So what I do essentially is, in order to get my areas of interest, because previously what I would have done is I would have looked at this move lower in the dollar yen. This is just an example I'm picking up. And I probably would have said, oh, look, where's our last bullish candle before I move low? Where's our bearish order block? And I probably would have said something up here, which is a valid area. But look how much downside I would have missed trying to get, like, waiting for that, which is, I found frustrating. So instead, what I've done is I've utilized this Fibonacci to basically draw the previous swing move. The standard way you draw Fibonacci, from the swing high to the swing low. Oh, God. There you go. The swing high to the swing low, okay? Whatever, however you want to draw that is up to you. Now, if you struggle to draw that, there's an auto fib retracement tool here, which helps you with that, which is quite cool. Oh, sorry. You see that? So however you want to draw that. So this bit is the only one. Hello to you, Sanzo. Good to see you on the YouTube channel. Hope you're doing well. This is the only bit which is a little bit subjective. It depends where you want to draw your Fibonacci's. I always draw it from sort of, the most logical swing high to swing low, and you have to practice that. And I would utilize the auto fib retracement if you are a bit confused, because it just maps it over it like that. Then basically what I do is I look for these areas of interest, and those areas of interest are the 38.2, so that line, the 50, which is sort of not my preferred, if I'm being honest, but it is a valid area of interest, and then my preferred area of interest, which sits at the 61.8. So basically where these lines are, that's basically what I look for, okay? Interesting, right, okay, cool. What we then do is we wait for the market, and I'd probably, to be honest, in my opinion, I'd look for something like this, because that's the most recent move. Once we've got our areas of interest, as you can see, all I do is I go through and I set alerts at each one. So I'd have set an alert at the 38.2, at the 0.5, and the 61.8. And if you look at my alerts column at the moment, you can see I've got those areas of interest locked down. That basically means I can carry on with my job, and all I've got to do is wait for it to ping on my computer or ping up on my phone when that alert is set off and when that alert is triggered from TradingView. Once that alert is triggered, the scalping way, should we say, of how this works is once that alert's triggered, I zoom in onto the lower time frames. So whether that be the 1 hour or the 15 minute or the 5 minute or even the 1 minute. And basically what I'm looking for is a situation where the market, so my alert would have been triggered here, and it was triggered on Friday. And look at the reaction we got from there. And you can see that if we would have followed that structure down, where is it? In here, you can see that the market reacted lower, bit of a retracement, and then you can see that trend starting to shift lower. And you'll probably notice that it doesn't just hit this level. It doesn't just hit these areas and sink, right? You know, you get multiple retests of these areas. So there's two ways that I trade when we're at this level. Methodology number one is, where's a good example? Methodology number one is I look for 4 hour, daily, 1 hour, 15 minute order blocks or FVGs that are around these areas of interest. So somewhere that sits, something that sits around this area. Like for example, if you look at oil right now, here's my Fibonacci. There's the 61.8. And right on that 61.8, you can see a really nice, supply zone or bearish order block, whatever you want to call it, around that area. So that would be a decent selling opportunity for me in terms of how I would do it. And then, as I said, the scalping way of doing it is to go onto the lower time frames. So let's go back to dollar yen because we're at that area now. Head onto the lower time frames and wait for a reaction on a lower time frame and try and get in at the entry of a bearish order block or liquidity sweep or FVG or anything like that. So for example, market moves lower. You could argue that right there was a decent area. Was a decent area, right? Because we had a reaction from that and it started there. You may have decided to sell there. Nothing wrong with that at all. All I would say is my risk is predetermined depending on the time frame. So anything on a lower time frame, like a 5 minute, 1 minute time frame, I'm always only ever risking 0.5% per trade. And then I'm always closing at, I'm always closing half my position at 1-to-1, and then I'm closing the other half, another half or another piece of the position at 2-to-1, and then my stop loss goes to entry. So this was a trade that I was actually in on Friday afternoon. We come up to my area. I was happy. Yeah, right, okay, I'm selling here. The market reacted, and we got 2.33 to 1. So when the market hit 1-to-1, 0.5%, I closed 0.25% profit. Then we got to 2-to-1, and then I moved my stop loss to entry, and you can see the market come and stop, would have stopped me out if I hadn't done anything. And the power of doing this is it means you don't have to be right in the markets to make money. People always think that in order to make money in the markets, you have to know exactly where the direction is going. Well, I got the trade or the direction of dollar yen at that point. I got it wrong because the market come up again. But guess what? I closed about 0.3, 0.4% profit on it in about 45 minutes of trading. Happy days. And then we just keep following that, and we just keep being and keep looking for those areas around where our key level is, And you know, I'll show you an example of where these key levels can. It doesn't necessarily mean they're gonna fall at this level, but they can fall at this level. That's the point. It's an area of interest for us. Doesn't mean that this is gonna sink to the floor as a result of that. Okay, so here's a nice potential trade opportunity. Didn't actually manage to get into this one, but logically we would have always cover the most recent high. This is where you've got to understand your smart money concepts. And there we go. What happened? If you managed to get into that one, you would have got all the way down to 7 or 8 to 1 before the market reversed on you. And actually still, when it did reverse on you, it hit our entry point and then reacted again. Funnily enough, when I go on the 15-minute time frame, this was a trade I took yesterday. And you can just see how I'm just trying to kind of catch on to one again. Always cover the recent high. There was our supply zone. I actually got that supply zone from the Smart Money Concepts indicator. Look at that. Boom. 4.5 to 1. Closed out. I think in total I closed out. It's here. Closed out, you know, over 2% profit on that. And then we come back up to our entry this morning and I got stopped out at my entry, but I'd already closed enough of the position to be happy. Yeah, I left about 1% on the table. But again, I wasn't necessarily right in the fact that the daily move or the daily expectation is for once we hit this area for a couple of retests, and then really what we're looking for is the big move down back towards that 0 level on the Fibonacci. That's our sort of longer term target. And trust me, all it will take is to get one of them right, where you catch onto it on a 15-minute or a lower time frame order block or FVG if there's no order block. And if you can get onto that and you get the momentum and it goes all the way down and it completes that swing move again, then you're onto a winner. You're onto some really nice trading opportunities, right? So that's the way that I do it. I'm just going to stop now because I've probably been rambling. Just going to stop to see if there's any questions. Hello to you, Zach. Good to see you. And thank you very much for the message. Hopefully that made sense to you guys. So on the free option of TradingView, I think you can have a certain amount of alerts, but I've said it to everyone. I haven't got an affiliate deal with TradingView or anything like that. I think it's always worth paying for the premium. It's like £15 a month, but you get unlimited alerts, and you get like enough indicators that you don't need to pay. You don't need to buy the third tier one, just that middle one. So I think that on the free option, you only get a certain amount of alerts that you can set. So to summarize, what I do all the time is I look at the daily and the weekly time frame, and I mark my swing move. That way I'm always following the trend, remember, because I always like to do that. I mark my swing move. I mark my swing Fibonacci level. I then have 3 areas of interest: the 38.2, the 0.5, and the 61.8. When my and then when I look at those areas, I look to see if there's a higher time frame order block or an FVG within that area, on that area, and then I trade directly off that. If there isn't, then I just sort of use that more scalping method where I move down onto the lower time frames, halve my risk, and just try and catch onto that momentum. What you will find is that the market might sit around this area for a few days, maybe even a few weeks. But what that's doing is it's creating pressure and it's creating more opportunities for those higher time frame order blocks. So at the moment, this example, it's fresh, it's new. But if I look at another example, for example, the USD versus the Swiss franc, look at this. Here's our swing move from the top here down to the bottom here. And if you look what's happened, we've been around that 38.2 for 22 days, right? And you can see that there's been times where the markets, come up above here. So I imagine if you try getting into a scalping opportunity around here, you would have got an amazing move. And then you got another opportunity here. Then you got another one. And while that was going on, what's been happening is there's been a build-up of sort of bearish order blocks at the time, right? And I noticed that if you look at that on the 1 hour time frame, what do we have here? Covering the 38.2, covering this Fibonacci, this key area here, we can see that red box. That's my bearish order block, and therefore I entered the market here. Look at that. As of yesterday, traded 5.5 to 1. So again, I'm risk-free on this trade because if the market comes up now to here, then I'll be stopped out, and I wouldn't have even got. I would have been stopped out at entry, but gained like 2%. And that's the power of having a risk management strategy. You do not have to be right in the markets to make money. It's one of the most important sayings ever, and it sounds so odd and it's so true. If you've got a really good risk management plan, you can be wrong in the markets and you can get away with not losing anything, and you can get away even with making money, as you saw on dollar yen there. We got 2 to 1, but then we shot up and would have taken out my stop loss. If I hadn't moved my stop loss and I'd have just left the trade alone, I would have lost. But because I had a risk management plan, which is, as I've said, and I'm giving you everything I'm giving you everything that the way that I trade here. This is the way that I do it. So there's nothing new in terms of how I trade using smart money concepts, how I execute. I've always executed off order blocks. I've always executed off FVGs. I always utilize market structure. So I'll make sure, like in this example, we did have a change of character there. So that was an initial sign of a break in structure. It wasn't a BOS, but it was enough for me to enter here. But the thing that's changed for me is the way that I utilize my higher time frame areas, and the way that I do that is by using the way I use that is by using the Fibonacci swing, using the 38.2, the 50, and the 61.8. As you can see on this example on USD versus the Swiss franc, I've got alerts set at the 50 and at the 61.8, ready for if the market and the dollar versus the Swiss franc surges higher. Okay, doesn't bother me. I'm already in a trade which is at risk-free. If the market does decide to surge higher, I've got an alert set at the 50 and at the 61.8. If you want to know my preferred levels, the 50 is probably my least preferred area. My favorite is probably the 61.8. That's my golden area. That's why I put it in this orangey gold. And then the 38.2 is if you're trading a market which is has a strong trend in one direction. An example of how this works as well, if you look at, and I can delete this now because this is invalid, because it's already invalidated that area. And all I do is every single week I go through my red list of markets and I mark my key levels and I set my alerts, and then I sort of have a quick look every morning just to see if anything's changed like this, and then when it does I just change it accordingly. Let's look at the example here on the pound versus the US dollar. There was our Fibonacci swing. We moved down to the 38.2. If you managed to get in there, look at that, fantastic. If you'd have managed to get in on a lower time frame, look at this, wow. And this is where it can work really well. Reaction from the 38.2, break of structure or change in character there. What did that change of character leave behind? An order block. Come and tested it. You may have decided to cover these equal lows. Let's say we would have decided to cover the swing low here. Right. Then look. And you always would have targeted the completion of the Fibonacci for me. I mean, it went even further if you want, but I would have probably been out of the trade at that point, and I probably would have been happy to be out of that trade because look at that reaction there, 6.6 to 1, zero drawdown. You can see how that worked really, really nicely. What else was there? And it doesn't always work. Here's an example of where it didn't really work for me, and I believe I took one loss and one winner on the pound versus the Swiss franc. Because if you look here, daily time frame again. Here's my Fibonacci swing. Nice few reactions from the 50. Maybe could have got in, because remember these are daily candles, so you probably could have got some moves there. We exploded higher right into the 61.8 last week. My alert was set off, and when we touched that 61.8, I zoomed in onto the lower time frames because there wasn't any higher time frame order blocks or FVGs. Sometimes there is. We had a bit of a reaction here, and I tried to basically sell off this area, even though it probably was a little bit high risk because there wasn't much of a break of structure there. We did break this low. I wasn't the trade didn't really get going, and I was stopped out straight away. Doesn't always work. These levels are just key levels just to give us a higher probability of success. It doesn't give us 100% success. Nothing will ever do that. And you can see after that, you notice that we're now trading above that 61.8. And when that happens, I just go, okay, fair enough. Remove my drawings, turn off the indicator, and I'll revisit this market at a later date, should we say. There was a really good example on the S&P 500. Where was it? Oh yeah, it was here. Was it there? I can't remember now. There was an example a few weeks ago. Let me try and find it. It's 28 days ago. No, I might not be able to find it. Apologies. Oh, there it was. Another example. This would be an example of where we'd be able to actually trade it without using the scalping method and using the higher time frame method. And for me, when I trade on the daily and the 4 hour, I have more confidence in that. It's a longer trade. It's a bigger stop loss normally, and I'd normally place 2% risk on that. Here's our swing move. There to there. Sitting around this in our area was a daily imbalance of 50%, and that would have been constituted a good entry for me. I then covered the 50 and into this area as well, because if we close below there, we probably wouldn't go to 61.8. It wasn't the best example because I prefer these areas to be covering the key area, if you know what I mean. That one wasn't quite, but that was when I was just sort of trying to do it. Sorry, I've missed the chat. It's 5 notifications on the free account. Okay, 5. That's not too bad. Maybe give this a go on sort of 2 markets, 2 of your favourite markets. Should be right on that. It's up to you. Or if you're someone who knows checks the charts all the time, then you can do that as well. It's 6. Clone says it's 6. Yeah, and as Dan said, you can use the fib extension for profit taking. I'll be completely honest. I'm not a massive fib fan, or haven't been in the past. And I wanted to keep it as simple as possible to get those areas of interest. And then my real skill, which is analysing the markets via smart money concepts, comes into play. So yeah, that's a rundown on how I do it. So if you look at my working week, I come to the charts on a Monday. I click through all of my click through all of my key markets, and the first thing I do is draw that weekly or daily fib and draw it all the way down. I then go back to the top. If I've got a fib, a good fib, I set the alerts at the key levels. I zoom in on those key levels just to see if there's any higher time frame order blocks or imbalance FVG areas. If there isn't, I'll have to use the scalping method and wait for that consolidation to build, try and take some little bits out of the market here and there, like I've showed you on dollar yen. Wait for those alerts to trigger and then go. And that's it. And that fib might stay there for a few weeks. And like you saw on the USD versus the Swiss franc, what can happen is we can get consolidation around that level. And when we get that consolidation, that builds some higher time frame 1 hour, 4 hour areas where we can look to then trade from that area after multiple retests. So it's unlikely that it's going to test it for the first time and then sink or go up to the sky. It did on that pound dollar example, so it can happen. Often you have to have smart risk management strategy in order to make sure that you're taking stuff out of the market. And if anyone has any other questions on that, then feel free to get in touch, and I'll let you know my risk management plan, which I have already. Okay. That was a long old stream, wasn't it? Good stuff. All right then, everybody. If anyone does have any other questions, drop me a message in the trading room and I'll be more than happy to help. I hope that made sense. If there is any confusion, just keep rewatching the stream back, or ask me any questions, privately, and I'll be able to answer them for you. Until then, trade the day well, give it a practice, see how you get on, and I'll see you all